But we want to turn now to the topic of the housing market because it's been hot in 2021. Demand for new living spaces has remained elevated, but so have home prices, which surged to a new record this year against a backdrop of tight inventory and labor and material shortages. For more on the housing market outlook, we're welcoming in Greg Daco, Oxford Economics Chief U.S. Economist. Greg, it's always great having you on. When we think about the housing market heading into 2022, we've seen home price appreciation continue, but at a somewhat moderating rate. Should we expect prices to keep going up next year?
Yeah, I think in general, we should continue to expect prices to go up, but the pace at which they're rising should cool. We are still in an environment in which there is still robust demand on the housing front, but the composition of that demand will evolve over time because we've seen that higher price appreciation along with the prospects of higher interest rates erode affordability and weigh on the demand for potentially smaller houses in the housing market. So we're still in this environment where there are constraints, including on the supply side, as you mentioned, with regards to labor, with regards to lots, and even the price of lumber. These are constraints on the supply side that will continue to represent a headwind for the housing sector in 2022.
Even though these prices have, slightly normalized, not even normalized, just come down slightly, they're still astronomical, right? So my question is, I speak to brokers all the time, particularly in New York, and they are telling me that deals are getting done on the spot, sight unseen. They're cash deals only. And people are still outbidding each other in these cash wars. And then some of the people that are buying these homes, they are very wealthy individuals. Some of them are older. Some of them are buying these as second homes and, taking out a small mortgage and then using it as a way to sort of transfer their wealth onto their family and avoid paying these larger taxes. So how much of this investment boom that we're seeing is actually driven by investors?
Well, I think there's a big share that's been driven by investors, but it's also been driven by wealthy individuals. We are in a market where we've seen very rapid price appreciation that is reflective of an environment where there is a strong imbalance between the demand and the supply of homes, especially new homes, where inventory levels have been low. This is an issue that has been in place for the past decade. Very low inventories have led to this rapid home price appreciation. I think the bifurcation that you're alluding to is very important to note because we've seen very rapid price appreciation and demand for the larger homes, more expensive homes, and there's very little market at this point for smaller or mid-sized homes that may be a bit cheaper and may allow first-time homeowners to really enter the market. So that bifurcation is likely to remain in place over the course of next year as we see still strong demand for these larger homes, builders focusing more on these larger homes because they can generate a larger profit, and still that supply and demand imbalance on the lower end, lower priced home front.
How do you see demographic changes impacting the housing market going forward? Because you mentioned in a research note that demand should continue to be underpinned by younger households. How is this going to impact the type and the rate of home purchases going forward?
Well, in general, we know that the late or the older generation of millennials is really looking to enter the housing market. They have the finances built up, they have strong credit scores, and they have an environment in which overall they're not excessively indebted. So that's the strong backdrop in terms of the potential to enter the housing market with a labor market that's continuing to rebound with job growth that is expected to continue to grow over the course of the next year. That should provide a strong backdrop for these younger potential homeowners to enter the market. But again, there is that question of availability and of prices that are rising very rapidly. And so the affordability question becomes a bit of a constraint when you have home prices rising so fast and when you have the potential of mortgage rates rising with the Fed leaning towards a more hawkish stance going into 2022. That's likely to put further upward pressure on long-term yields, and that could be another constraint in terms of the potential demand from these younger people that are desiring to enter the housing market.
Yeah, and I was going to ask you about what sort of pressure rising mortgage rates will have. And also want to ask you on the forbearance issue through the CARES Act, as you know, these mortgage forbearances, and what are you seeing in the market from people who may be having problems or struggling to make their mortgage payments?
Yeah, I mean, there are really two sides to this story of protection of homeowners that may have been behind in terms of payments. The protection that was in place should remain in place for the next few weeks, but is likely to expire. And what that means is essentially that some homeowners will have no other choice but to sell their house. That may not necessarily be such a bad thing if there was such an appreciation in the prices of these homes. It could also create some potential for movement or mobility in terms of the housing market, which may free up some of the housing supply that had been locked up over the past couple of years and may allow for more flows into the housing market as a result of that. But in a sense, you have to remember that this may mean the loss of a house, even if it's sold, the loss of a house for a potential homeowner, which can have also drastic consequences for those that are in the unfortunate situation.
Are we past the peak level of disruption to home building in terms of labor and material shortages that we've seen throughout this year? And are these constraints going to ease into next year?
I don't think that we're past these disruptions. I think there are still going to be a number of supply constraints going into 2022. We're not going to just enter 2022 without any supply constraints. There are supply constraints that are very specific to the housing market. There are others that are broader, but in terms of the housing market, we are going to still see some constraints in terms of labor shortages. Labor shortages were already visible prior to the COVID crisis in the construction sector. It's an issue that's been in place for the past decade, since the financial crisis. A lot of people moved out of the construction trade. We also have seen less immigration, which has been a constraint on construction labor. We still have this issue of land and being quite expensive. And we know that there has been an issue of lumber being very expensive too. It's on the rise again, and that's another potential supply constraint. So they may gradually alleviate over the course of the next year, but I don't expect supply constraints to dissipate overnight in 2022.
And then really quickly, I just want to know, how do you see demographics changing over the next year as far as where people are looking to move? Because are people still mobile because of being able to work from anywhere they want now?
That's a key uncertainty for 2022. The key question will be whether businesses, employers will be more flexible in how they allow and where they allow people to work from. We have been in an environment for the past 2 years where remote work has been a key relief valve in terms of the overall labor market, because people are able in those trades where they are able to work remotely, they have been authorized to do so. The key question is, do we get a drive back to get people back into the office? How strong is that drive once we're past COVID? And does that influence then people moving back closer to denser, more urban areas? As things currently stand, I think that will be a very gradual process. I don't expect to see people being forced back into the office very rapidly. And therefore, I think that some of the moves that we saw during the pandemic are likely to remain in place. And we're likely to continue to see this broad diffusion of housing market activity in urban areas as well as non-urban areas.
That return to office, definitely a trend we're watching closely. But Greg Daco, Oxford Economics Chief U.S. Economist, thank you so much for your time.